I'm Joe Drazio with the National Apartment Association. Here's what you need to know to sort the signal from the data noise in this month's Research Roundup. It's officially spring with warmer weather and blooming trees, along with all the pollen. The seasonal predictability is a sharp contrast to the uncertainty surrounding the Strait of Hormuz traffic, the tenuous ceasefire in Iran, and elevated oil prices. With Brent crude above $100 per barrel in April, average gas was about $4.30 a gallon, a noticeable jump from last year. For a commuter driving 15,000 miles a year, the roughly 30% increase can add about $750 to $1,000 in costs. And it's not just about commuting. Oil is central to shipping, transportation, and manufacturing, so higher prices are feeding into broader consumer costs. April inflation data showed price growth picking up. CPI rose 3.3% year over year, driven in part by an almost 19% jump in gasoline prices. The Fed's preferred PCE index also ran hot, up 3.5% from a year ago, while core PCE, excluding food and energy, rose 3.2%. Inflation is clearly moving away from the Fed's 2% target. Not surprisingly, at the April meeting, the Fed left the overnight rate unchanged. If oil prices stick around, the central bank has limited room to maneuver as a new chair takes the helm. Markets moved quickly after that 1-2 punch of hotter inflation and steady Fed rates. The 10-year Treasury climbed above 4.4% in early May, signaling expectations of higher inflation for longer. Housing felt it right away, with the Freddie Mac 30-year fixed rate popping back up to 6.3%. That capital market volatility is spilling into the broader economy. Companies are stuck between soft consumer sentiment on one side and surprisingly resilient retail spending on the other. Keeping with the seesaw pattern of the past 10 months, employment rebounded in March and unemployment held at 4.3%. Job gains were led by healthcare, construction, transportation, and warehousing. Meanwhile, applications for unemployment benefits remain at historic lows. Average hourly earnings rose 3.5% from a year ago. With inflation running at roughly the same pace, many workers are still struggling to keep up with monthly expenses. Most indicators still point to a K-shaped economy where higher income households keep spending, while lower income households feel growing financial pressure. Consumer confidence ticked up a bit in April, though it's been mostly moving sideways. Meanwhile, the University of Michigan's sentiment index dropped. Even with those price worries, retail sales rose again in March, pushing first quarter transactions up 3.7% from last year. Consumers spent more on clothing, building materials, and appliances, along with sporting goods and electronics, with online retailers posting especially strong growth. So, what does all this mean for housing? New construction was mixed in February and March. Builders are walking a tight line, trying to add more affordable supply while inflation and interest rates stay elevated. Permits fell, but housing starts jumped, helped by more multifamily projects breaking ground. Completions remain modest. The for sale market is struggling with very low transactions at the start of the spring season, squeezed by high prices and the new normal of mortgage rates above 6%. Inventory is improving, but many homes are still listed at prices that don't line up with what today's buyers can qualify for. Even with 1 in 6 homes cutting prices, the gap between buyers and sellers remains wide. On the rental side, conditions still point to solid demand and a more balanced national market. With rents around $1,800 a month, many renters are finding better value. And with new supply, especially across Sunbelt markets, rent growth should stay moderate. For more details and data, check out the new research reports and articles we've just published. You'll find the latest apartment market pulse and labor market dynamics reports, plus articles on construction, build-to-rent market insights, multifamily insurance costs, and trends in real estate compensation on our website. And for ongoing updates, be sure to follow NAA on social. Enjoy the Maine sunshine, and I'll see you next month for another Research Roundup.